Today is a historic day in crypto, but unfortunately not for a good reason, because over $2 billion got liquidated in the last 24 hours. And I won't lie for you, I'm also sitting in the altcoins or maybe shitcoins. Overall, my drawdown on my bankroll is around 30-40%. So I'm sitting in this shit with you, or I hope without you, if you are pretty smart than me, you know. Today I want to talk with you why the fear is the worst advisor in the world.
Bad news creates buying opportunities. Good news creates exit liquidity. You buy when the market looks like it's collapsing. You sell when the hype is so high that your barber, your Uber driver, and your coworker are all talking about buying Bitcoin. Every major top in history has had one thing in common: retail euphoria. Every major bullish headline in the past has marked local tops. When El Salvador announced it was making Bitcoin legal tender, we saw a surge, followed by a sell-off. These headlines weren't signals to buy, they were traps for retail investors. This isn't just a crypto phenomenon. The same thing happened with gold. Markets move in cycles, and mainstream news will always be late to the party. On the flip side, when Bitcoin fell below $20,000, the same experts who were bullish at the top were now calling for 5,000 BTC. Everyone suddenly became a macroeconomic genius, explaining why crypto was dead. Where did all those analysts go? If you're still trading small accounts and over-leveraging just to make meaningful gains, you're playing a losing game. The best traders in the world don't gamble with their own money. They manage risk and leverage other people's capital. Funded accounts are not just a good idea in 2025. They are a necessity. Instead of risking your own capital, you get access to large accounts by passing a challenge. Check the description for exclusive discounts. Support and resistance are just liquidity zones. If you're still relying on clean horizontal levels for entries and exits, you're playing right into the hands of market makers. These levels aren't magical barriers where price reverses. They're zones designed to trap liquidity. Look at how many altcoins have broken through major support levels recently, only to bounce right back after triggering stop losses. These aren't random moves. They're calculated liquidation hunts. The market operates on sell to buy and buy to sell movements. If you don't understand this, you'll always be the liquidity for someone else's trade. I've broken this down in detail in another video, but the key takeaway is simple. Most traders lose because they follow predictable patterns. The market punishes predictability. This market is behaving differently than previous cycles. Bitcoin isn't moving in sync with Ethereum and altcoins like it used to. Correlations are breaking down. That means if you're still approaching this market the same way you did in 2021, you're going to get wrecked. This is why you need a plan. Gambling on narratives, following hype, or trading based on gut feeling isn't going to work. Stick to strong assets and trends like government tokens and AI. Stop listening to noise. And most importantly, don't let fear control you. If you do, you'll always be the one giving your money to someone else. If you want to develop your own strategy, use my free website and get exclusive discounts on funded accounts. Good luck and don't gamble.